What's up, everyone? Ben with the BTC Sessions here, and this is your daily session.
Hodl that Bitcoin.
Before we jump in, I just want to give a big shout out to the sponsor of the show, Ledn.io. This is where you can use your Bitcoin for a couple of different services. The first of which is a Bitcoin savings account, so you can stack some sats on top of your sats. So the way it works is you can deposit and get interest back on your Bitcoin paid in Bitcoin. And the second service is a Bitcoin-backed loan. So you can secure a Canadian or US dollar loan using your Bitcoin as collateral, and it always sits in a dedicated account that you can audit 24/7. So if you want to check out either of those offers, you can click the link down below, and if you opt to get a loan, they'll actually credit your account with an additional $50 worth of Bitcoin. And secondly, if you're into Bitcoin, then privacy is important, and one of the things I use for that is NordVPN. I use this quite a bit. It's on my phone and computer, and what it does is it hides your IP address, it encrypts your browsing data, and it has a few added benefits, including being able to unlock geo-block content. So if you'll use the link in the notes down below, then you can get a deal where it is $3 a month. And with that, let's dive into the news. So we started seeing rumblings about some quantum computing as of late. Now, story broke a little while back at some point last week regarding Google saying that they've just reached quantum supremacy, just basically meaning that they have quantum computers that are now capable of computation that basically was impossible before. And some people have speculated saying that this is scary as hell for Bitcoin and other cryptocurrencies that use cryptography, that it could be broken. But there's more nuance to it than that. And so I waited a little bit to kind of sift through a few bits of information before talking about it. And so first we have to talk about quantum computing. It's not like a yes we have it or a no we don't. There's kind of levels to it. There's a scale. Okay, so you need to talk about how strong is your quantum computing, how many qubits do you have, and how many do you need in order to achieve certain things. And the level of quantum computing that has been reportedly achieved by Google is nowhere near enough to break something like elliptic curve cryptography or SHA-256. So we'll get into those in a second. But in essence, it's not something that is right around the corner or something that needs to be dealt with right this moment. And so let's talk about those two things that I mentioned before: elliptic curve cryptography and SHA-256. So elliptic curve cryptography is what we use when it comes to essentially signing transactions. So having a private key and a public key, and using the private key to sign transactions that are allocated to the public key. And so if this gets broken, what is the threat? What happens then? Well, essentially what happens is when you receive Bitcoin to an address, all you can see is the address. And so you need to be able to understand what public key that address came from. The public key is not yet in fact public when you receive Bitcoin to an address. The public key is only actually made public when you use your private key to move Bitcoin from the address holding funds. So if you had some Bitcoin in an address and you spent some of it but not all of it, and the rest remained in that address, then yes, you would be revealing the public key to basically the entire Bitcoin network, and anybody can see that information at that point. And so if ECC or elliptic curve cryptography is broken, then somebody would be able to, upon that spend, be able to see your public key and then reverse engineer the private key that it was generated from, and thus be able to steal those coins and move them. So again, that is still not near being done, but if it was, then that's what would be at threat. Any coins that had been sitting in a wallet that had also been spent from previously, those were the coins that would be stuck. So Satoshi's original coins, having never been moved, would actually not be at risk here. They would just be sitting there, and any coins received to an address that had not been spent from yet also would be safe, is my understanding of it. Now, if SHA-256 is broken, then essentially the whole thing is broken. Basically, Bitcoin would be broken. And at that point, we would need to, if we wanted to continue on with the chain, migrate to a completely different algorithm, hashing algorithm. So that would be kind of end game, and you would need to move to a quantum resistant model. So how worrisome is this? Well, like I said, the stuff announced by Google is essentially not nearly there yet. And we also don't even know if it will actually, in fact, get there at any point, if it's scalable, how it would work. But it is something to think about for the future. So should we just make everything quantum resistant now? Well, that would require a hard fork. And with that come some implications. So we would essentially be hard forking for a threat that may exist at some point later in the future that we have no idea when it's coming. And I think that in itself sets a dangerous precedent, in that we are just kind of throwing out hard forks at any point, and that means that the promises, the hard promises that build the foundation of Bitcoin, are suddenly malleable for any perceived potential future threat. And I don't think that's a good way to approach things. I mean, if it came down to it and cryptography was broken, then I have no doubt that people would shift over to a quantum resistant model. But when you start throwing out the idea of hard forking just because something may eventually happen, then you run the risk of making it no big deal to hard fork. And when it's no big deal to hard fork, then all of a sudden, all those little promises, things like a 21 million coin cap, become questionable, whether it's actually a solid promise or whether we can change that. And if enough people got enough clout and decided to change that 21 million coin cap, and were able to sway the masses into that system, then I think that could be a real threat. And let's face it, a lot of people don't really understand the economics behind a disinflationary model. And I think that could be a real risk. So I think it's important that hard forks be an absolute last resort. Now, the other thing to think about is, if quantum computing gets to that point where SHA-256 is broken, then there are much bigger things to worry about than Bitcoin being broken. Essentially, every bit of encryption across everything, like nuclear codes, all that shit would be broken. And so you'll know when it's broken very quickly, but likely it's not going to be because some Bitcoin gets stolen. The incentive with whoever gets to that point first is to keep that a secret. So a good movie to watch is I think it's called Enigma. Anyways, it's a movie about Enigma, the cryptography used during the war. And so when they broke that code, the British broke that code, they basically had to fake their information. When they figured out, when they decrypted a message from the Germans, they had to fake where they got the information from, so it wasn't obvious that they had broken it. So in those instances, they had to let some bad things happen if there was no way to say, well, we got this information from somewhere else. If the only place that it was known was via encrypted messages, then they would give themselves away. And so I think that if somebody got to that point, the last thing they would want to do is steal some Bitcoin when there are much bigger fish to fry, because then all of a sudden you get this rush into everybody updating everything, and I just don't think that they're going to waste their time on Bitcoin at this point. It's too early, and there's much, again, like I said, much bigger fish to fry. So in essence, I don't think it's a threat, and if it becomes a threat, then it's a quick switch over to a different algorithm, which will be more or less in everybody's best interests. If you want to hear more about this, of course, I have the link to this down below, and this Andreas video. I basically just rehashed a bunch of stuff that he said in this video. I'll link to that down below. It's also in the article there. So let's move on. So a number of US crypto exchanges have formed an independent council, basically a ratings council, to figure out which cryptocurrencies are or are not securities. And I wouldn't even say are or are not, but like a scale to rate how much of a security they are, which is a curious thing because in the eyes of the regulators, it is or it isn't. But they've created a scale from 1 to 5, and so the people involved here are Coinbase, Kraken, Poloniex, Bittrex, and some other major. I think that's it. Yeah. Those few and a few other kind of custodians. Anyways, so they've evaluated around 20 different coins at the moment. A couple of them got a 4.5 out of 5. So basically they are securities. Those ones were Maker and where's the other one? Polymath. And the ones that obviously were not securities, obviously Bitcoin, because we've heard as much from the SEC. A few others get a mention here: Litecoin, DAI, and Monero. And so things that contributed to that is, there was not an unfair rollout. There's no pre-mine. There's no ICO. Things like that. And so all those coins that I mentioned scored a 1. Now, I don't know how to feel about this because, 1, I don't really care about the other coins. 2, I already knew that Bitcoin was essentially not a security in the eyes of the regulators. 3, this just kind of seems like a bunch of companies want to get together and be their own regulators so that the other regulators don't get to be regulators. Which, I mean, it still ends up being regulation. In the end, the effect is the same. So, again, I don't really know how I feel about this. It seems like it's just more of the same, but with different people in place. And at the end of the day, like I said, I think Bitcoin's what's important. It's also curious because honestly, there will be security tokens at one point. It's only a matter of time before somebody comes out and they're like, hey, do you want to buy Tesla stock in the form of a token that you can hold in your own wallet? Sure. We're already seeing the first inklings of this with stuff like Abra, where you can use Bitcoin and then peg it to the value of various US stocks and kind of move in and out of that and other fiat currencies and things like that, and other commodities, where essentially Bitcoin is the instrument through which you're doing these pegs, but then you come out back into Bitcoin once you've experienced the volatility of the asset that you want to peg to. So it's just a matter of time before you actually just get a token that's associated with the security that you want. I don't necessarily have a problem with a tokenized security, but that's also considering if it actually gave you the utility that you wanted. Like if I could buy stocks in certain companies and not have to be on like TD Ameritrade or whatever, or like my bank holding stock in something else, and instead just actually be holding the digital certificates myself, then wonderful. But I don't see that being an initial first step when it comes to this kind of stuff. I think the regulators are still going to want everything on those centralized entities, and maybe we'll see something Trojan horse its way in, and maybe it'll be too late. Maybe it's already too late. Maybe, who knows? Anyways, I'm going to move on. So Tom Lee, the king of bad calls, like I can't fault the guy too much. He's just super bullish all the time, but just sometimes to his detriment. Like he was calling for 50K at the end of 2018, and he couldn't have been more wrong. He's always calling for like insane price points, which I don't think are unattainable. I just think it moves slower than he expects it to, and he doesn't expect bear markets, mostly. Anyways, he does have a bit of good advice here. And so that advice is missing the 10 best days of the Bitcoin market every year will kill you. Basically, unless you're an incredible trader, you're getting screwed. So the last bull market in 2017, just in the top 10 days of the year, you got an 1100% return. Even in the bear market in 2018, if you were only in the market for the 10 best days, you still got a return of 66% on your money. However, if you miss the 10 best days, what happens to your returns? Well, on average, since 2013, if you were not in the market on those 10 best days, you are down an average of 25% a year, every single year. So think about that. A lot of traders are emotional and they wait. It's like a lagging indicator. If something happens, most traders will jump in afterwards and try and catch the tail end of a pump, or it starts dumping and then they drop out at the bottom and it starts to turn around. People are emotional like that. They know the idea of buy low, sell high, but most people just they can't do that because it's very difficult to time the market. In fact, we were talking about it on the show in the last couple of weeks where 95% of all traders fail in the end. So basically, like, how good of a trader are you? This is why, for me, the best tactic is just to stack sats and sit back and hold and not worry about it. I hate having to worry about that. There's been nothing nicer than just sitting out this bear market and not giving a shit. It's so much less stressful. Yeah. So anyways, a piece of good advice from Tom Lee. Good on you. Let's hold up on the price predictions from Tom and just do more of this practical advice. I think that's a good idea. Anyways, let's move on. One last thing. Little article out of Bitcoinist. Now, if you were new in 2017, you may have missed this story or it may not have been on your radar, but essentially this Dutch family ended up selling all of their belongings in September 2017 and trading them for Bitcoin and then just kind of gallivanting the globe since then. So what has happened to them over that time? Well, the good news is that when they did that swap, when they sold everything in September, Bitcoin was around $4,000. So even with the bear market, like they did it early enough where they've still doubled their money essentially at this point. Even though we're down from the peak in 2017, they didn't buy at the peak. They weren't far off. It was December 17th, 2017 was the all-time high. So since then, they have been to 35 countries. They named a couple that were the easiest to survive in, specifically on Bitcoin. The two cities that they really pointed out was Roberto in Italy, and I'm not going to even try to pronounce this, but it's in Slovenia. And they were able to cover about 80% of their needs just directly in Bitcoin. Now, they also mentioned that the kids are having an interesting time. Oh, these poor kids. Anyways, they get their allowance completely in Bitcoin, and then they have to figure out how to spend it. Okay, so I'm conflicted about this because on the one hand, awesome that they're learning about sound money. Awesome that they're learning about time preference and in general. But also, I mean, they're fucking kids. Let them have their allowance. Maybe split it. But like, can you imagine being a kid being like, Dad, I want to buy something from this store. And he's like, well, you got to figure it out. And the thing is, they're too young to get one of those debit cards that links to like a Bitcoin account. So they can't even do that. So I don't know. Anyways, honestly, in a few years, these guys are going to be rolling in it anyways. So whatever. But I guess good for them. Well, I guess good for the dad because for sure the kids didn't have any say in this. But I'm sure a few years out, they're going to be very happy about this decision and not have to worry much. Anyways, I'll cap it there. What do you think about this family? Would you do this to your family? I wouldn't do it to mine. My wife would kill me. She's very, very supportive. But I would not force our family to live solely on Bitcoin. I also like the separation. I like that I can spend dollars, my depreciating asset, and save in an asset that I believe over time will appreciate in value. It keeps that separation rather than having to be like, okay, these are my saving Bitcoin, these are my spending Bitcoin, because then I feel like it may get muddled and I may, dip into the wrong accounts. It's like the fiat world where I dump all my Canadian dollar shitcoins, and then the sound money world where I just save like hell with sats. Anyways, let me know what you think. I'm going to wrap it there, guys. Thank you very much for watching. If you're new here, of course, hit like, subscribe, and share. If you're not new here, still hit like and share. If you want to help the show in another way, hit up either of the sponsors, Ledn, Nord. Those are down below. And if you really like what you saw, you can always hit my tippin.me page and tip me with a Lightning Network tip. And I forgot to mention, actually, hit me up on Twitter, but I'm doing a presentation locally at the Alberta Treasury Branch Entrepreneur Center on Wednesday at noon here in Calgary. And I'm talking about Bitcoin versus blockchain and crypto. And it's a litmus test for bullshit. So I hope to kind of drive people towards the real innovation and get them to ask the right questions. So if you're in town, be sure to hit me up. Be sure to come down and give it a watch. I've got that up on my Twitter somewhere right now, or just tweet at me if you can't find it. Anyways, I am out. Have a wonderful night, and I will see you tomorrow for your daily session.